Today, we are talking about a guide for single home buyers. Hey, this is David with the Zy Mortgage team. We get calls every single day from different demographics of people, and we get different calls about monthly payment, income, asset, liabilities, different challenges. But today, we're going to address one of the biggest challenges, which is one income in purchasing a home. The reason I started thinking about all of this is, the National Association of Realtors recently released a statistic on who are the most prevalent home buyers out there among single men and single women. So single women are seriously outpacing single men when it comes to home ownership. However, I think it's really important to help you overcome some of the challenges that come with home ownership and how to purchase a home as a single homeowner and what the benefits are. So obviously, some of the biggest priorities and benefits for, different demographics, especially a woman. I mean, in my case, I'll tell you right now, my wife keeps everything organized from the personal finance side of things. So, her goal all along from the second I met her to, getting married was, hey, we have to establish home ownership, and how are we going to do it? And once I got a taste of what home ownership did for me and my family and created this multi-generational wealth, it's like, wow, really have to do it. From a wife's standpoint, buying a house, for various reasons, such as, the independence, having that financial stability, the desire for independence, and what home ownership does, it helps you so that you're escaping any uncertainties in the rental market. When you're renting, your rent can consistently go up. When you have a house, your mortgage principal and interest on a fixed rate mortgage stays fixed the whole time. And every once in a while, it'll adjust based on the taxes and insurance. But having a home, regardless of when you purchase it, as long as you plan on keeping it long enough, will provide an investment opportunity that, you're not going to see anywhere else. If you look at what the housing market increases and decreases from and to over the last, 10, 15, 20 years, you'll see there's always a trend up. Okay, we recently had a statistic come out that says, hey, for the first time since 2012, we had a drop in the value of houses, and it was only a 0.02% drop. And this is really important to note that of all these years of having, anywhere from 1% gains all the way up to 15% gains per year on the houses, it creates a fantastic opportunity from investment from a equity standpoint. You're going to have that tax benefit that you'll be able to write off mortgage interest. And you also have the benefits of, when you do have it paid down, you could potentially cash out some of the equity in the house and use the equity to purchase another home that will be your primary residence and provide you the same type of beneficial terms that you were able to get when you first did your financing. One of the biggest elephants in the room would probably be the absence of your second source of income. So what does that mean? That, as a single person, you have one source of income. As a married couple, both people are working, then you're going to have two sources of income. So there's always something to fall back on just in case there are emergencies. However, realistically, we're always planning for a home, right? Realistically, if we get a mortgage, let's say in 2023 today, in 2025, hopefully your financial outlook's going to be a little different. We've all had raises, and this is something that I'll always tell first-time home buyers is go onto Zillow, go onto Realtor.com, go onto any of these national websites, put in any address you want in there, and just take a look. Where have the values gone? Okay, have they gone down? Have they gone up? Have they been cyclical? Have they flatlined for over a certain period of time? But the overall trend is that you're going to see it go up. Here are some tips that I would like to talk to you about on how to prepare for home ownership as a single person. So we always want to make sure our credit score is strong. We want to take a look at the credit. We want to make sure that we're knowing all the different factors that affect the credit report, such as the utilization, where your credit limit is and what you have used. We want to make sure that we're making sure that all of your bills are paid on time. So there's nothing late, there's no collections or judgments or charge-offs that pop up on your credit during home buying process. We want to then address some of the financial challenges, right? If we have some debts that are, let's say, spaced out, I've seen people with as little as 1 or 2 credit cards with everything on it, or I've seen people with 10 to 15 credit cards, and you've got balances between $20,000 with the credit cards that they owe the most on, and then there's these little like $200-300 balances on the little cards. And at that point, we would want to consider maybe a power payment plan. The way that works is, you address the smaller credit cards first. You pay those off. You're making the minimum payments on everything, and you aggressively pay the smaller credit cards off. Once that credit card goes away, you take that payment that you're used to, and we go to the next credit card that has the next lowest balance, and we're also attacking that plus paying what we were originally paying for the minimum monthly payment and paying that off. And we just wash, rinse, and repeat that process over and over again. And with that power payment plan, you're now going from 15 credit cards, maybe down to 3 by the time you're ready to purchase a home. So overcoming those financial challenges is really important. I think another thing that's really important is before you jump into a housing payment as a single person, you're looking at all of the opportunities to make everything better. Whether it's out there looking for another job in the same line of work, or going to school and picking up some additional knowledge so that you could find a better job. That's number one. Number two would be, putting away a little extra money. So if you're currently paying rent of $1,000 and you're looking to get a mortgage payment of $1,500 every single month, why don't we try for 12 months or 6 months to see if we could put away that extra $500 into some sort of savings vehicle, such as, with interest rates higher, then saving interest rates are a lot higher as well. Or put it into a CD. Put it into something that if you touch it, you're going to be penalized for it. And that's the best way to know if you could afford that monthly payment. Always, always, always be prepared to compete. When you're in the housing market, even in these challenges right now, we're still clearly in a seller's market. And that is based on data that we see where there's very limited inventory on everything that's out there because everyone has super low interest rates. You've got a lot of aggressive competitors out there that are looking at the same houses that you're looking for the same type of floor plan, looking for the same monthly budget. So whether you're in the 100,000 range or you're even in the couple $1 million range, there's going to be competition for houses because when there's a unique piece of property and there's a home that meets your needs, I can guarantee that there's going to be that type of shopper out there that's looking for the same thing. So always be prepared to either make that full price offer or engage in that bidding war to overbid sometimes, or maybe not even ask for any closing costs. So building your financial reserves is going to be really good. Next tip I would say is consider all low down payment options. Low down payment is not just FHA, is not just USDA, is not just VA. Know what you're looking at when it comes to all the different mortgages. Know that conventionals can be done with as little as 3% down, 5% down, 10% down, 15, 20% down, whatever the percent may be. Know the advantages of every one of those mortgages so that you can make sure that you find the mortgage payment that's going to fit you the best. Look at alternative sources such as your 2-1 buy downs, or maybe even adjustable rates or longer terms or interest only type payments. This kind of leads us into the next point is make sure you shop for your mortgage. Shopping for your mortgage is extremely important. As many people know, I always advocate for wholesale mortgages. There's a reason for that, okay? You're getting the same type of mortgage for a lot less. When you're dealing with a mortgage broker or a wholesale mortgage lender, like Nexa Mortgage or the Zy Mortgage team powered by Nexa Mortgage, we're able to shop between 195 different investors. So we're looking for the best deal for you. And the great news is that there's no middle level management or advertising or beautiful buildings that we're having to pay for. And that typically has a trickle down effect on your interest rate. So always shop those around. Make sure you're seeing what the differences in the true actual interest rates are, the discount points and all the lender fees, and your APR when doing your comparison. So don't always fall for the lowest interest rate. I recently just helped a customer who was shopping strictly for interest rate, and she fell for the interest rate and she decided to go with the other lender. However, by the time the other lender had disclosed to her, oh yeah, I can get you this, XYZ interest rate, it's because we're doing the loan in just your name, we're charging you X amount of discount points for this, so on and so forth. So everyone kind of sets their own number that they want to make on everything. And doing that shopping is going to help you save thousands of dollars, whether it's upfront or over the life of the loan. And then finally, I think the last tip that's really important, especially for single home buyers, is we get it, right? One person taking care of 1,000 square feet, 500 square feet, 2,000 square feet, 300,000 square feet, whatever the size of the house is, there's a lot of maintenance that's involved in the house. not just regular cleaning, which is extremely excruciating. There's also like maintenance, whether it be your plumbing, electrical, all these other household expenses that come along with your principal and interest, taxes and insurance, maintenance cost, all these other things. So maybe for the first couple of years, I would seriously consider maybe a home warranty policy. Home warranties are great. You know, something that'll cover all your major systems and appliances and things like that. So everyone's going to have something a little different. Like, you know, the home warranty that I have on my personal residence is going to be different from the one that I have on my investment property, because my investment properties have swimming pools, right? So I'm going to be covering the pump. I'm going to be covering, like, you know, at my house, I have two systems for AC systems. So I have to pay for that upgrade for the second system coverage as well. When you're looking at all those different factors, you want to make sure that you're actually doing your own due diligence and all of your homework, whether it be navigating through all the financial challenges, whether you're navigating through the down payment and closing costs, income, assets, liabilities, or even your maintenance cost. Make sure you're out there truly looking at everything. So I know this is a very, very long video, and we'll have a summary below on everything that you should be looking for as a single home buyer and how the benefits of home ownership are going to help you. If you have any questions or need help navigating through this process, I would be honored to help you out. My name is David Zai, and my phone number is 757-478-8493. I'm out of here.